Welcome back, everyone. It's a new week, and I'm making a video for uh, weekly forecasts and also a review of the trade from last week on cable GBP USD. All right, let me get into it. Well, so here I have the dollar index DXY on the monthly time frame. I hope this is not too many lines for some people, because well, I guess we all have our different ways, right? Sometimes a clean chart, and sometimes you need to have things on there. Okay, um, so it's about 5 days left for the month of November to be over. What does that tell us, right? We have this swing high, right? Higher high, then lower high. That's a swing high, and this is a very bearish candle for November. So well, it would be nice to see how the month closes, right? And I have lower targets for DXY, and I would like to see it, trade lower, deeper down into this order block, this opening price, um, before seeing a reversal on the lower time frame, right, going back higher. That will be in December. Okay, so well, so what I have here marked out here is the this dealing range, this low to this high, and that's the equilibrium, right? As I outlined in the previous weekly outlook video that was like 2 weeks ago, I believe, on my YouTube channel. Price ran stops here, sell stops, and reverted to go for buy side, traded into this CB, right? Sell side imbalance, buy side inefficiency, right? Um, and traded lower. So now we're below, the current price is just right about equilibrium of that dealing range. I believe it's going to push down into a discount, and we'll see what the levels are on the weekly time frame. I spent an unnecessary amount of time actually contemplating like how this video should go and how in what order, right? But action is better than taking action is better than just spending time thinking without doing nothing. So I'll be cleaning up the chart a little bit. Most of these things have been explained actually in previous videos, but just in case you haven't, seen them, which I believe it will benefit you if you do and you get more context. But I'll go over some of the things, right? So we have this high formed at premium level, right? And we have this run on buy stops, which is a run on that previous week high, traded lower, traded back into the order block, and we found displacement lower, continuation lower for last week's price action. So what can I be expecting, right? I pointed out weeks ago that we're going to be reaching down for equilibrium and ultimately for sell side liquidity right below this low, and you'll see what it looks like on the daily time frame. But before I go to the daily time frame, I want to show you well what discount levels I'm looking at for the weekly, right? Because what I think is going to happen is, well, like I said, few more days for the month to close, for November to close. So, depending on how, I would love to forecast how December is going to play out, but honestly, the accuracy of that forecast is going to really depend on how November closes. Okay, so things that can happen are well, this week is a bearish week, right? Let's say it's a bearish week and we have a down close. Well, it doesn't even have to be a down close, honestly. But let's assume, okay, it's a down close, right? If it's a down close week, that means it depends. And if it's a down close week and there's not a lot of retracement, right? That means that November monthly candle that we just looked at will be like a fully bearish monthly candle, almost as it is right now. So that what that tells me is, well, December is probably going to start with even more, bearishness and go lower. And if that happens, I'll be looking at this price level, that bullish order block um for price to reach there. Okay. Uh, well, actually, if that's, yeah, I'll be looking at that. Then, well, this fair value gap here would also be a target. Okay. So these are kind of like intermediate term targets, and that's with the conditions that I've just listed previously, right? If price closes heavy, then about the first week, second week, or first 2 weeks of December will, continue lower. Then we can find a retracement higher. Okay. So, but what happens if this week is bullish for DXY? Okay. Say it's bullish and it just chooses not to even reach for here, right? Or it reaches for here, runs a turtle soup, and just goes back up into this. Well, that would mean November is closing not as heavy as it looks right now, right? And well, we're talking of in about a matter of 4 days, right? We're going to see. So that means November is closing not as bearish as it is right now. And well, if that's the case, then we could be getting, December. We could do two things. Well, just probably just consolidate right in a small range within this the range of this November candle, right? And we could reach for this fair value gap, right? We could just have it bouncing in between this fair value gap premium high and low. Okay. So those are things that I'll be looking at. But for this immediate week, right? For this immediate week, um, I favor sell side. Okay. I want to see. I believe my analysis is still going to play out. We're going to reach the end of that billion range. Let me go to the daily time frame. Okay, I think I can delete this now because it's kind of just ordering the chart. Um, okay. So you see how price respects, well, the body of this candle respect that equilibrium, right? Until, well, here we have like a little bit significant close below it, right? So it kind of traded down into this rejection block, but not quite. It was off by it was off by a few pipettes. Okay. So um what I think is going to happen for this week, we already know if the week is going to be bearish. Most times we want to see, the high of the week form between Monday and Tuesday London session. Okay, excuse me. Okay. So general liquidity is sell side, right? 102.936, and below that we have this fair value gap here. The fair value gap. I think I'll just draw it out. Okay, so that's the fair value gap with the midpoint of it. That's the consequent encroachment. So that's what I'll be reaching for. Okay. Uh, Last week was pretty much a consolidation week. You know, we had Monday open, dropped lower, Tuesday dropped lower, then reverted higher, traded into this bearish order block. Now we started trading, made the high of the week, start trading lower, right? Close bearish on Friday. So for this week, well, if this week is going to be bearish as I'm anticipating, then I believe today's Sunday, but Monday, tomorrow we'll see, you know, either Monday or Tuesday, creating the high of the week. I probably won't be trading on Monday. That's tomorrow. Or I might be making scalps, or just taking probably 10 pips here and there from Euro or from GBP USD. Right. I don't really look for big swings or one shot one kills until like Tuesday, where I have more clarity into what's going to play out for the rest of the week, right? That's one thing. The probabilities play out in your favor, and you have more, confidence on what the weekly profile is. You can always try to, anticipate it. You can always try to predict, but um, if you allow, just some time play out, which is say, if you allow Monday pass by, you kind of get more insight into what exactly is going to happen for the rest of the week. That's just something I do. So sometimes if you see me on Monday, you just probably won't even think I'm a trader because I will look at the markets, right? Well, especially for forex, I can skip that, but I'll be in, say index futures, right? Nasdaq or E-mini S&P. So um, I'll be looking for price trading higher, how high, right? This right here is a premium array where price could really just go there, respect it, and start dropping, and there we have the high of the week. But I wouldn't just jump into conclusions. I would like to wait and time, right? Time and price. We can just look at the price level and think, okay, well, yeah, let price go there, then I want to buy. So at least that's not how I operate, right? I want to see price at certain levels at certain times, right? At certain times, certain days. Okay. So right now it's Asian session. So the week is just starting. I don't, you know, I'm not going to just say, oh, we have to wait for more information for that. But one thing I have is, well, my draw on liquidity, right? So every other thing I'm going to do is going to be according to the plan. What's the plan? The plan is, well, I want to see price go here. So most of my trades will be me selling dollar and buying foreign currencies, right? And usually it will be euro or pound against the dollar. That's what I'm going to be trading. Okay. All right. So yeah, most of my trades will be shorts for dollar, but actually longs for cable and fiber. Okay. So I'll allow, well, at least this Asian session will pass, London session will pass, then I might start, attacking during New York tomorrow. And like I said, it's going to be very short scalps. Okay. Where you have, well, my framework now, this is, well, a market maker sell model, right? So I really don't want to see price go, above here. We've been to a premium level, right? So and prices, you see how price rejected that, broken down, displacement lower, and yeah, everything else would be just price dropping. Things that could happen, right? Like I said, bearish week, right? And bearish week doesn't necessarily mean bearish close, because one thing that could happen is we see speed and displacement on Monday and on Tuesday, then price drops down here, gets to the target, makes that the low of the week, right? And if that's the low of the week, well, what happens next? Price starts reversing, right? So, and well, if price starts reversing, midweek reversal Wednesday, and Thursday will go higher. Uh, Probably make the high of the week on Thursday, and Friday closes. Well, uh, if I check my calendar, this month ends, well, November ends on the 30th, and that's Thursday. Okay, so December, a new month begins, well, on Friday, and that's going to be NFP, I believe. So, well, I wouldn't even want to be trading on Thursday, right? So Monday, Tuesday, Wednesday will be, the days for me personally to attack, right? For me to trade and to operate. So I would really be interested in the profile I just mentioned is really how I think is going to play out. See speed and displacement lower between now and Tuesday. That's well between now and the end of Tuesday, right? Then if price reaches this target by then, right? Then we start reversing. Okay, so where's that? So something like this, right? That begins a new what? Market maker buy model. Okay. That's how it works, right? That's how it really works. Frameworks, narrative, weekly profile, time, price. When you have all these things aligning together, that's how you get um all right, so I actually had to cut some things out of the video because I was going back and forth. Uh all right, so I actually had to cut some things out. I remember I said, well, like when price trades here, it could go here. But remember, that's only right depending on the delivery for this week. If price, speeds down here, and forms the low of the week, that would then, be a bullish week, right? And that would be, less heaviness for the closing of this month of November for DXY, right? But remember, there's still this downside target, right? Um That's that weekly order block, and there's this fair value gap. So December might want to dig into that. But remember, like I said, for now, we're focused on the short term to intermediate, right? I want to see how this week is going to play out. Is it going to give us low of the week here, or even here, then start going higher, or is it going to just run this previous day's low, that's Friday's low, then start running higher to make the high of the week? Um, Let me see what's up here. Okay, so that's an inversion fair value gap, right? So like, are we going to run back up there and give us half the week and start trading lower, right? Excuse me. All right, so dollar bearish, right? Right. So I shouldn't have this arrow, extended so much because I mean, at first glance, if anyone's looking at it, you just think, oh, that's bullish, But the context, remember, everything is all about the context, right? I've outlined profiles and different contexts and how they could play out. So whichever one happens first will allow me know how to act on that, right? Okay, so going into euro, right? Euro USD. Let's see. Okay, so well, what do I have here? If I'm expecting further downside on dollar, then I'm expecting bullishness on euro, right? Well, how far can it go? This is a potential target, right? This right here, that closing price of that bullish candle, that's a rejection block. Okay, so that's a potential target the price could go for. Rejection block on the monthly time frame. This even is another monthly closing price, and we like to see how price reacts around these levels, right? So Let's go to the weekly time frame. So those are levels where price could draw to. But then if we compare, right, the range on the dollar is kind of like small, right? But the euro kind of seems well, it's not that much as well. It's just about 70, less than 100 pips, right? So that's not too large, right, for a week's trading. Okay, so I like to see continuation higher. Um, Back when I was trading candlestick patterns, I used to think this was indecision and price would just reverse lower from that. Now, um, well, let's look premium and discount, right? From this high to this low, that's the dealing range. We're above equilibrium, okay? And I think price is going to reach for a higher premium level, right? And those monthly levels that we just marked out, that I just marked out, are possible targets. And I'll show you what this deviation is from. Well, so it's from this swing low, right? This last price swing, right, led to the runner stops here and the reversal. So that, you know, one standard deviation, 2.5, right? Just mark out two, so two falls right there, runs by stops, retraces into this other block, down into equilibrium, continuation higher, right? So, well, this is the daily chart. Uh, just want to see, first target will be previous week's high, and things that could happen is price could run previous week's high, today, tomorrow, Monday, and trade lower, run Monday stops, trade down into this other block and continue higher, right? Or just stall here, consolidate, run lower, right? Then keep going higher, right? In the later half of the week. If it's going to be, a bullish week, and a bearish week for dollar, of course. So, but if dollar is going to have, an early bearish week and a midweek reversal, then what we expect in euro is to see speed higher Monday, Tuesday, and the reversal between Tuesday and Wednesday, right? So that which one of those cases we are going to see um will be, you know, we'll see how that goes. I can't pick one of them right now. I don't have, enough information. I'll have to wait to see what Monday does, how Monday closes before I can. That doesn't mean I can't, go in and scalp. Like I said, I'll be, scalping euro or pound. So, but yeah, these levels, right? These are the levels I would like to see price reach for, aka draw on liquidity. Okay, a draw on liquidity, where price is going to reach for, right? All right. Let me go into euro pound. Okay. Euro pound, euro pound. All right, euro pound, right? What I was trying to see happen in euro pound was, let me show you. Okay, this right here, this two lines, it's a daily fair value gap, right? So I wanted to see price reach into that daily fair value gap, but it didn't. Well, guess what? It did reach for it though. The premium high of this daily weekly fair value gap. Okay, so let me show you. Yep. So price, traded into that weekly fair value gap and just kept going lower. It didn't quite get to that daily fair value gap. Remember, the higher time frame is always superior to the lower time frame. Okay, and now we have this swing high. We have euro pound being heavy. Okay, so bearish, and I'll be anticipating price reaching lower for sell side liquidity. First, swing low here, then the second here, right? So that those are downside targets for euro pound. And if euro pound is bearish, right, that means I would want to be buying pound instead. And if euro pound is bearish and dollar is bearish as well, that means pound is going to be GBP USD is going to be the pair for me to trade, right? If I'm going to be buying it, and that's what I've been trading. Recently, actually, I've been trading GBP USD more than euro. Euro used to be my favorite pair, but just because pound moves more, GBP USD moves more, I've gravitated more towards that. So, nothing much for me to do here. That's just just the analysis, right? Just running for sell side liquidity, and you see how that's going to be completing a market maker sell model, right? Market makers model. Okay. And yep. So that's the framework for euro pound, right? And now getting into GBP USD, right? Okay. So getting into GBP USD, uh, bullishness. Okay. I'll be anticipating price moving higher as dollar moves lower. Okay. Targets would be here, the opening price of um that candle, and see that's a bearish order block on the weekly time frame. Okay, so that's a draw for pound dollar, right? And I'm going to be showing this from the forex.com feed. I actually marked out, I have like I have it marked out on this order feed one that is just I want to start with a clear chart first before going into all that, all those details. But excuse me. All right. So well, we have a market maker buy model here as well, right? That that's that bearish order block, right? And doesn't this right here kind of seem like a original consolidation? And remember, if pound is going to be more you know volatile than euro, right? If euro pound is really going to drop, then we can see pound dollar, right, show more excitement in moving higher. So while euro pound might stall and consolidate, right, and not really reach for those targets, euro pound might be pound dollar GBP USD might be flying higher. Okay, for the rest of this month, which is about 4 days left, and December. Okay, so and that will be to complete this market maker buy model. And of course, you can see, there's even a bigger fractal, like from here to here, then back up there. But for now, I'll be looking at that. Okay, so I'll just be looking for pound to dig higher into this. It's going to take some time for me to, I'm trying to get better at making these videos cleaner. All right, so yeah, buy side liquidity up there. That's that opening price of that monthly candle, and which is also a weekly, bearish order block. And we can see, pound dollar completing this market maker model, right? And we have institutional level, right? 1.2800 is right there. Okay, so those things, right? That is bias, okay? That's bias, how price, navigates through it, how price moves through it. Um, storyline, right? The context behind it. Um, is the narrative, okay? Jesus Christ. I think I'm talking too slow. All right. Well, so that's that for pound dollar. I think I'll now be going into yeah. So here, right? This I know might look messy. Okay, might look a little, or maybe like a lot of mess, but this is what I framed about maybe 2, 3 weeks ago, right? This breaker, right? Price went higher, traced back below it, and now we're back into it. Okay. So how price trades within it is crucial because well um what I just analyzed, right? And you see me mentioning targets like 1.2800, but you have to think about well the conditions of that, right? And that's depending on the mode of delivery. Like if like I said, if there's a lot of excitement and euro pound is really heavy, if euro pound is really heavy, then we're going to see pound dollar flying, okay? And that will be well valid in this breaker. I'm going past it, right? For that um 1.2800 target, right? But for now, 1.2685 is a drawn liquidity I have, well, a target I have from my projection from, right? I'll show you where. All right, so well, this swing high to that swing low, that's how I projected that standard deviation, right? 1 to 4, okay? And well, the high of the week formed just at the 2.5 standard deviation from this projection. Okay, so and my continued targets is going to well, to 4, then can measure even higher 5, right? So we get to the end of that um breaker because this blue space, this blue box rectangle is that weekly breaker. That's what that is. Is it weekly or is it daily? Daily actually, right? Those two consecutive candles that weekly bearish breaker. Okay, so I'm gonna be quick with the review, right? So the all right, so this is the market maker buy model, right? Where you saw me, if you follow on Twitter, if you follow me on Twitter, you would see. Well, I called out 1.2615 in advance, right? I called it on 11/22. Wednesday or was it Tuesday? 11/22. Okay, so 22. That's Wednesday, right? So that's that, and that was the half of the week on Friday. Okay, so but the whole framework between for that right was based on you know the top down analysis, the narrative, the whole framework, right? All those things I just mentioned, I want to see they came from well the video I posted 2 weeks ago on the YouTube channel, right? My weekly outlook. So everything ties together. Like if you're seeing a trade on the 15 minute, on the 1 minute time frame, you have to realize that the analysis came from, the 1 hour, the 4 hour, the weekly, the daily, the monthly time frame, right? Like everything ties together. And the higher time frames have like a lot of influence on what's going to be occurring in the lower time frames. So, well, I was anticipating, last week to be, a bullish week, right? And well, if it's going to be a bullish week, the normal protocol would be, to see price drop down, okay? To see price drop down from the low of the week and uh trade higher later. Why? Because well, a lot of people are going to, be chasing price at the beginning, at the start of the week, right? And that's what happened like on Monday. Monday, price open on Sunday, immediately started, going higher, right? On Monday, what did you think was going to happen? People are going to start chasing price, start buying, right? So price was, consolidating, then dropped lower sharply on Wednesday. Run, sell stops, right? Because, well, whoever was buying it, they must have thrown their stops below lows, right? Below old lows. So, and well, their stops got run out and price reversed. Okay. So what did I do, right? I sold here, right? And that I'll take you to the lower time frame and you see that it's the low risk sell of the market maker sell model. Because well this is a market maker sell model actually. Then and it's part of the bigger market maker buy model. So how is that a market maker's sell model, right? So this is that, fractal, right? This was the what I just shown was on the 15 minute, on the 1 hour, but now this is the lower time frame, right? So there's that big consolidation. But on the lower time frame, you can see how this is a market maker sell model. This would be, the original consolidation, price trades higher, right? We have smart money reversal here, okay? And we have this fair value gap, right? And that was the low risk sell, and I sold right here. Price started trading lower. Redistribution, right? That was the first stage of distribution. Breakdown lower. And we have the second stage of distribution, and we see all that speed and displacement to the downside, right? So it's a classic market maker sell model. Actually, if you look at it, then price just kept, running retracement and went lower to make the low of the week. Remember, there's going to be speed and displacement when price is in a hurry, right? When the algorithm is in a hurry to meet a target and to deliver price to a certain level at a certain time, you're going to see speed, right? Pulling of price. Okay, so uh, how well I got the low of the week, right? My exit was I don't think it was quite as precise as me getting the high of the week, but I got the low of the week somewhere within this the smart money reversal within this box, right? Because this standard deviation. Let me see. Let me show you how I marked that out. And people ask like, why did you use this? Why did you use that? Well, the thing is, there are a lot of like ways to mark out standard deviations, and you just really have to like excuse me, you have to test and study them to see how exactly they they will play out for your analysis and how you can use them because the thing is confidence is going to come from your personal work, right? From your personal tested data. You can always get information, go on Twitter, search for value gap, go on YouTube and get all these things, but you will not be confident enough to use them until you actually put in the work and actually study them on your charts, take screenshots, journal them because that's how the learning comes, right? It comes by repetition, and if you do one thing over and over again, then that's how you're gonna gain um the knowledge and confidence to apply these things because application is where growth comes in, right? It's not just by studying and taking in information. If you don't apply it, then uh you wouldn't be doing yourself the best service. So this low came in this two standard deviation. I used the bodies of this 1 hour swing, right? This 1 hour swing is I use the swing deviation from the body of that, the highest body to the lowest body, right? That I projected -1, -2, right? And that was within the daily fair value gap. Okay, so when you use deviations, you want them to be like you have to align them with PDRAs, right? And obviously higher time frame PDRAs. Okay, so I was already anticipating. In fact, I posted on Twitter like, uh, wait, probably, I don't know, maybe on Twitter or in my Telegram group chat, and I said daily fair value gap, right? Like I want to see that daily fair value gap get traded too. So traded to the high. We saw some reaction at the consequent encroachment, the midpoint, right, of the fair value gap, traded back to the high of it, then it broke down, traded to the low, and below it, then we got that, accumulation, right? That's smart money reversal before we get, a change instead of delivery, right? And what's that? When price trades back above this opening price, right? We have a bullish order block. Price trades lower, excuse me, expands higher, right? And we have a balanced price range because, well, on the 30-minute, that's a, excuse me, on the 30 minutes, well, 30 minutes must be on the 1 hour. Okay, so on the 1 hour, right? That's a CB, right? Sell side imbalance, buy side inefficiency, and also, well, on the 30 minutes, it is, but then you look at the 15 minutes. Wait, I don't like this low that area. When price gets back there, that's if price gets back there, it shouldn't go below equilibrium. It shouldn't even be getting to equilibrium of that balanced price range at all, right? And well, what's equilibrium? I mean, the midpoint of that balanced price range, mean threshold. So what happens? As soon as we have this displacement, right, this fair value gap, I marked out that, okay? Because, well, this is the discount low of this fair value gap, and this is the premium high of this. And what's this is from the 1 hour actually, right? Because this is a whole 1 hour fair value gap, which is also, well, if you extend it to the right, it's an inversion fair value gap. Okay, so it's a bearish fair value gap that is going to be later used for to send price higher. All right, so price traded down into it, ran this stops and took off. Okay, my entry was at 1.24773, so it was well around here, right? And I held it. My plan was to hold because it was going to be Thanksgiving on Thursday, which is the next day. But that's fine. I was just going to hold and not enter like any other trade. So during like London session of that, I think I had not think I know I had another entry, right? Um, and I just allowed the trade play out, right? Then price completed that. Uh, the classic fractal of the market maker, buy model, which would be original consolidation, trade below the original consolidation, trade back into that original consolidation, go for, um, reaccumulation of shorts, second stage reaccumulation of shorts, and smart money reversal, right? Low risk buy, accumulate longs, accumulate, and final stage of reaccumulation, you see displacement, you see speed, right? So um, that was that, right? That was like what midweek. That was Wednesday, Tuesday. I think I had another entry here right before, before Thanksgiving was on Thursday, the holiday. So I wasn't going to, trade, place any new trades on the day. So the London session of that, or before that, I had an entry, and I took something off here. I took a partial. Then before the end of the London session, there was this retracement, and I had another entry, and that was the final one until price reached terminus, right? And I exited at the very last minute, and to precision of about, well, less than 5 pipettes off, right? Or well, I think it was exactly 5 pips off, so less than a pip, right? Um, and that was the high of the week. So that's where I closed all my positions. But yeah, market maker model, standard deviation, right? 2.5. Those were like the elements I combined for the trade. This chart is, not quite the cleanest. Um, yeah, this one is, I believe it's better. Okay, let me show you that daily. That's that daily fair value gap, right? That's that daily fair value gap price drop into it. So these things on the higher time frame, right? When you get the context from higher time frame, push them down to the lower time frame. It's all, the same concepts apply, right? Accumulation, manipulation, distribution, open, high, low, and close. These things can be molded into anything, and that's how you get, different models, and that's how you get different people with different trading styles, and you can, make anything work, right? If you can make a story, make your own narrative, and apply risk management to it. Okay. Um. So, well, from that market maker model, price traded back down into this ineff- uh, inefficiency, right? Accumulate within it, stalls, holiday, right? Time distortion. Price was just being held there, waiting to be delivered later, right? And that was, well, later Friday was a classic buy day, right? Opening price at 12, trade below it. London session funds the low of the day, trade higher, right? OTE, right? New York OTE, yeah, trade higher, from high of the day, high of the week, classic. Uh, and well, this right here is something I was, well, an example, right, of a tweet that I posted, and I was just explaining how order blocks, right, uh, for an order block to, okay, I guess this is going to be, like a bonus, right? Because I didn't even plan to explain this because, well, I forgot that I left it on the chart. So what I was saying is for an order block to get bypassed, right? For an order block to be run through, another order block is going to be created for that to happen. What does this mean, right? And I said order blocks represent a change in the state of delivery, right? And well, for a change in state of delivery, to be bypassed, there must be another change in the state of delivery in order for the algorithm to continue delivering price in the direction of institutional order flow, right? Something along those lines. I'm sure it should be quite accurate. Okay, so this is a bearish order block, right? This bullish candle right here is a bearish order block. It's the last up close candle before we see the surge of price downwards, right? So, but I'm going to use the week of this candle, right? Because the week is pronounced. When you have pronounced week for an order block, use the week, right? But if it's a short, if it has like a lot of body compared to the week, right? If it's a short week, then we focus on the body as the order block, right? The opening price. So I'm using the week, the low of the week, to the opening price as the order block extended out, right? So, well, you see price trade to it, trade lower. It didn't get bypassed. Why? There was no order block, right? This is not a bullish order block. Price didn't trade back above it. Remember, this was time distortion, right? Price was being held, okay? Price was being held because it was a holiday and it was being held, well, ahead of Friday's massive delivery, okay? Excuse me. So, well, price ran, buy stops here, trades lower, purge and revert, right? Purge and revert. Run stops here. Okay. Now, do we have an order block, right? The answer is no, right? Because, well, when price traded back into the order block, right, it trades lower. So, and when trades lower and creates, well, this bearish candle, now we have a swing high and we don't see price trading back above this bearish candle, right? We don't see price trading back above that. So we don't have a bullish order book. We don't have a change in state of delivery yet. So, however, delivery state has changed from bullishness to bearishness. So now we'll be looking for even lower prices and sell side targets. So sell side here, and ultimately down here, right? Okay. Well, when stops have taken, price reverts to buy side. And notice something here, right? If this is a bearish order block, what is this? That's a bullish order block. In order to bypass that bearish order block, price created this bullish order block. Trades above it, change state of delivery, trades lower, and continue higher, right? And that's, well, was the point of that tweet and of what I'm explaining right now. So it's something that you should dig into and study, right? Okay, well, so buy side liquidity, right, was tapped into here and price traded to the main threshold of that order block. And we see, well, another change in delivery state lower, to bearishness, trades back into that bearish order block, runs for this fair value gap, right? Discount fair value gap and reverts, continues higher, right? And now we have a change in state of delivery, bullish change in state of delivery. Remember, we didn't have any here, none here, right? And until we go here. And I think you might, want to ask, like, what do I mean there's none here? Like, is this not the same as this? Well, context is everything, right? Context is everything. And remember, we're not only dealing with price and PDRAs, right? We have to combine time and price for this algorithmic theory and elements to align. Okay. So what time was this? This was 12 o'clock. And if we're looking for bullishness on the day, right, we'll be anticipating price dropping lower, then trading higher. Here, this was the Asian session, right? Right after, well, Thursday's holiday. Okay. So we have, you know, price trades to that, created a change in state of delivery, back higher, ran to the mean threshold, right? But then there's a new macro. So price is just not going to say, oh, because, well, there are three consecutive candles down here that ran this low. I'm just going, it's just going to have this shallow retracement, right? And keep going higher. No, the macro then, right? The instruction then would be, well, okay, now the algorithm is going to look to form the low of the day, right? The low of the day, because now it's crossing over into London session. Time is greater than price, right? In terms of algorithmic delivery, okay, time is superior to price. So at certain times, when it's time for excuse me, uh, when it's time for a change, right, in order flow, time dictates that, right? Price could be at a certain level and be there forever because it's not time for that change. Look at this, right? Look at all this. Price was held here within this buy side imbalance, right? Price was held in that range for so long, the whole day, because, well, that was the instruction. It's a holiday. We're not going to move price today. The algorithm is going to hold price within that daily range. It's going to be distorted. That's distortion of time, right? So, but like I said, right, when it's time for a new macro to begin, time is going to dictate the order flow. Okay. So when we have, price break out of this daily range, because, well, this is a daily range, right? Running this high, running this low. The high, that's the high of the daily range, low of the daily range. We break, well, above the high of the daily range into that main threshold and trade back into it, into this discount fair value gap. Now we trade higher, right? We have the order block with a fair value gap, right? Displacements, price trades back into it, change in delivery state, right? And continues higher. So that's what I meant. I hope this helps you understand what that tweet meant, and you can also find more examples. This, I mean, I don't think you'll say this is like cherry pick or whatever, because you can always find a lot of examples on your charts, right? And we see, everything, right? Price keeps going higher, and, well, so I believe that will be the end of the video. Thank you for watching. I hope you learned something, and I wish everyone a good trading week. Oh, on every also, I'd like to say welcome to every new subscriber on the channel. There have been a lot of new subscribers on the channel. Welcome, and there's going to be a lot more posts and content from me. So, and if you didn't subscribe yet, if you're watching this video, make sure you like the video, subscribe, leave a comment if you have questions, and I'll answer you in the comment section. Thank you.